Hi everyone, welcome to my channel. I'm Jan, and in this video I want to talk about margin, free margin, equity, balance, what happens when you are trading, when you are marginal trading, let's say, what happens when you're trading using leverage, and what is margin call and stop out. So let's say we decided to trade $100, so we invested it $100 and we have leverage 1 to 400. So if you watched the previous video, you know that 100, it's kind of roughly is 100 times 400, you have around $40,000 which you can use to trade, which also you can see in here. If you press exposure, it will show you, so you have 40,000 value of the 40,000 USD. So you don't really see it in real, because really you have $100, but you can use that's your leverage, and that's what you can use to trade. That means you can open and close, you can buy, sell mini lots and micro lots. So you know that this is not enough to trade one lot, and that's quite important, because some people are trying to invest $100 in 1 to 400 leverage and trying to open one lot. So they're trying to earn $10 per pip, but you can't do it, because you understand now, if you watched the previous video, to buy 100,000 units of base currency, you need over 100,000, like in euro dollars, for example. To buy 100,000 euros, you need to invest over $100,000. So now you understand that, and even if we will trade with leverage, you still have to have that amount, because you only have, if this credit to 1/400, that's the only volume you have. So you don't have 100,000 in volume for trading one lot. So that means you know that mini lot would be 10,000, so you have enough to trade mini lots, and also to trade micro lots you need 1,000, and also you can see that this would be enough to trade micro lots. So, and that's what we can do with our $100 account, trading mini and micro lots. And once again, I want to say the warnings that you have to know that in Forex you can make money and you can lose money, so you always need to use money management, and you always need to use not your last money. If you're not sure, you just don't try to trade in Forex until you will get somewhere a professional advice on what to do and how to do it. So and in this video also we will be only talking about what is happening when you're opening and closing the positions and trading, and when the margin call happens and the stop out. And so we're not talking about money management at all. So we have an example. So we have $100 now, and we're thinking we want to, let's say we want to sell, and so we're thinking, so we want to sell mini lots. And once again, as you remember, what we do is that we're calculating what we need. So we have 1,000 euros we want to buy or sell. So we want, it's a micro lot, we want to do mini lots, because we want to make $1 a pip. We want be more aggressive, let's say. No money management, we're using no money management at all. So we have we need $10,000 times our price right now is 11251. Again, we don't use any spread, forgetting about it for now, which we'll be talking about in another video. So we need 11,125, but we have leverage 400, so we need to use $27.81 of our own money. The rest broker gives us to be able to open this position, but we need to put our money, and that amount is going to be a margin. And so you kind of right now are going to deposit this, and the broker is going to hold it just like a little insurance for them. So if the market will go against you, that's what you're going to lose, but the margin will be returned to you. after you close the positions. So right now we need to put $27, and so let's say we decided to sell. So we're selling 0.1 overload, so we have one mini lot. So, and we decided to sell. We have to accept this, okay, and press sell again. So as I'm saying to you again, this is all demo account, and do all this on demo accounts. Of course, just play with it first and try different types of accounts. Put $100, $1,000, just amount of money you want to invest. Of course, play with a demo account first before you will be doing anything on the real account, because you need to understand first how it works. So you can see that we calculated 27.81 we need it, and you can see it's right here. It shows to you that margin. So now the broker holds $27.81. We have also the other things here. So you can see that's our balance. The balance shows is our deposit plus minus our profit or loss after the trade is closed. You can see right now we have floating loss, and the balance is still the same. Until we close it, it's still going to show the same $100. So the balance will be always only showing what we have on our account after all the floating, all the trades closed. That's it, end of the story. So next one, as you can see, is equity, and equity you can see is different to the balance, and it's changing all the time. So probably you can understand now that equity, it's the balance minus wherever we have open the position, so minus loss or plus the profit. So right now we have loss, that means we $100 minus, let's say it's 410 now, you can see it's $95.90. That's exactly what it shows, and it's changing all the time. Margin you already know is it's $27.81, and so it's our kind of deposit to have that trade. Okay, so now we're thinking that we really want to sell more, then open a bit more positions. So what we can do, how much money we have left? Well, we can see that we have equity 99.50. We understand that equity is our balance minus wherever is floating now. So we think, okay, maybe we have $99. Really no, because we also have this $27.81 which are locked for this trade, so we can't really use it. So that means we have left this free margin, which is, as we will take 99.50 is our equity, and minus whatever we have here locked 81, so we have 70.69, which you can see free margin is changing because equity is changing. And so but we know that we still have $70 left, and so we want to sell more. So, and how much more we can sell? Again, we know that for trading one mini lot we need $27, so we can sell more, and another mini lot, and another mini lot, and maybe even possibly another mini lot, and we will see what is going to happen. So we have also here, as you can see, there is a margin level which is very high right now, is 349.51%. So, well, margin level is needed to know, because when you're going to have if the market goes against you, you're going to lose, and of course the broker will be trying to warn you that there's something happening which is wrong and you need to do something about it, and they will be doing margin call. So if we would look again, different brokers will offer you different levels of margin call and stop out. We have margin call on Tallinex is 150%. What does it mean? That means when here margin level will be 150 and less, we will get margin call, warning from broker to do something about it. When margin level will reach 100%, we will have a stop out. That means the positions will be automatically closing. The biggest minus position will be automatically closed first to release margin, to release more money for the account. if you ain't going to do anything during the margin call. So let's see how it's happening. Let's say we sold again. You can see I'm still having 160% margin level. I have free margin 38, but I have locked $55, and now I'm going to sell again. And you can see I have a third trade, and I have free margin is 8. Now I can do mostly nothing, and you can see the margin level is 110, so it's less than 150%. You can see I have a red line, so it's the broker is kind of warns me and tells me, come on, you need to do something about it. So of course they're not calling you, but you can see it here. It's red now. Red, you have to do something. So what you can do is to close any of these positions. So we don't need to close the biggest one. So if I will have a margin, if I will have margin level 100%, automatically the biggest loss will be closed here to release more margin. So to release margin. So but when you are doing it yourself, you can do some other different manipulations, and you might close, or you might try to lock it, and to instead of sell you can buy. But we will be talking about it in different videos about the locks. But at this moment you can see that we actually have free margin is very low. It's mostly nothing, so we can't really buy or sell anything. So you can see here we are, the margin level went to $100, 100%. We couldn't see it right now. You can see it's 150 and 10. It's more than 150, and it's not red anymore. But you can see, look, I only have 2 positions open. And let's check our account history. You can see the biggest loss just was closed. So what happened right now? Right now, a stop out happened. So automatically the system closed me, and we've lost the biggest trade with the biggest loss in it. And you can see I have again margin call, and but you can see I have less margin now, but so I have more free money, because the free margin now is 28, 27, $26, which as if I would try to lock, for example, to do something. I don't want to close my money, so I can try to lock, and I have enough money to buy, for example, to try to reduce the minuses. But again, about the locks, we will be talking in different videos, so you wouldn't be confused. But let's say in this situation, we can't really, well, you can think of maybe close or just wait. Still more, we still have 142%, and we still have now 40% before we're thinking maybe it will go back again, and so I might still be okay, except we see it goes against, and if I'll try to sell again, I wouldn't be able to do it. Right now it's too low, I can't sell, but I can buy, as you can see. The other way around, I could buy, so I tried to lock a little bit of the position, but as I say, it's going to be a bit different story. But that's margin call, because margin call warned me. I could, you see, I couldn't sell anymore, but I still could buy, so I could improve a little bit situation with my account. So that's how kind of the margin trading works. So that's why you need to know all different techniques and strategies of trading, how you can improve the position situation on the market, what you can do. There are some different options where you can still help your account. So and you can see the margin level is again back to 800, back to 81, and the margin now is $27. Let's just close all the positions, so you would see that the margin is going to be back to the account. So we can see in the account history we have so many losses. It's minus $22, and we have, you see there is no margin anymore, so we returned our margin, and before the losses, and this is what we have left on our account now, $77.50. So that's it. So also, if you would look in the symbols, we also have the commission, as you can see, and swap. And if we're trading micro account, there are no commission, because broker takes spread. The commission for broker would be spread, and we'll be talking about it in the video. And if you trade on pro account, so you can see here shows you the commission will be here, and there is also here you would see swap, and which you also need to know, because sometimes many don't understand where it's come from. What is it? Because swap can be also in plus and could be in minus. You need to know when you trade, like for a few days, if you didn't close your trades during the day, I think it's up until 5 p.m. New York time. After 5 p.m. New York time, you will have that swap if you didn't close any positions before that. So I'm not going to tell you a lot about it, all the details, but the point is that if you have open position, doesn't matter bought or sold, but you need to move that position to the next day, and because of that you either have to pay, so you will be taking a little bit money from your account, or you will be paid for leaving that position and moving it to the next day. So you see, it could be either plus, it could be either minus, depends on the current situation, what is happening. And so it's kind of usually not as big, as you can see, and but you have to know about it. So it can be minus, it can be plus, it could be different a little bit. So, and there is also another thing, is that if it's from Wednesday, if you're moving it from Wednesday to Thursday, then it will be triple time, so it's 3 times more than the normal. Normally swap is like one swap, and it will be like 3 times bigger your swap from Wednesday to Thursday. I think that's it. If you have questions still, you can ask, and that's all. Don't forget to subscribe, and see you later. Bye everyone.